Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's date is February 17th. We're going into February 18th. I'm going to take a technical look at the Aussie versus US dollar. Before getting into that, however, I'm going to talk a little bit about fundamentals because we had the Reserve Bank of Australia interest rate meeting minutes come out. This is from the meeting that they cut rates back on February 3rd. They cut rates by 0.25% from 2.5 to 2.25. The expectations for the March meeting is for another cut to 2% from 2.25%. But the meeting minutes this time showed a little bit of a hesitation, if you will, for the cut last month, which has some traders thinking that perhaps in the next month they'll hold off on cutting rates. They're concerned about the housing market in particular, about it overheating. If they cut rates further, that might continue that idea of housing prices continuing to move higher, especially in some of the major cities like Sydney and Melbourne. So that is one concern, and that perhaps gave the Aussie versus US dollar a little bit more move to the upside. Now, in those meeting minutes as well, they gave a little talk about the value of the Australian dollar being overvalued still, and we had comments today from Reserve Bank officials talking about the value of the currency. Once again, RBA's Edwards specifically said that lower Australian dollar would be even more useful to the economy to get the exports going. That has been a sector that's been hurt as a result of the slowdown in China and also the higher value of the Aussie dollar. So anyway, trying to kickstart investment in business by talking down the value of the Australian dollar. So that's a fundamental perspective. What's a technical perspective showing? We did have a nice little support here around the 77.46 level. If you recall, going back to these days right here, that was a low prices, not just once, but twice. And then the market fell through that level, and that level became a point of resistance right here before moving to our low price here, where we couldn't take out the prior low from that interest rate decision day, and the market started its rotation back to the upside, reestablishing that 46 level as a support level, also helped by the 100-hour moving average. That's the blue line, the chart right here, and that helped push market to the upside in trading here today. Now, we also found some support near the 77.88 level in trading here today. As you can see in the London morning session, the market bounced off that level and moved higher. Maybe it was an early New York session as well. What's the significance of the 77.88 level? Well, if I go to the monthly chart and I take a look at this green line right here, what level does that come out at? 77.87.9. That's our 200-month moving average, folks. And so the market found support against a 200-month moving average. Yes, they do look at that. And the market bounced off of that level. So we're seeing initial support here at 46, higher support here at 88. And so we're stepping to the upside for this currency pair. What would be the next target on the top side? Top side, this yellow area right here, where we have a low here, we have a low here. We broke through that level, and then that level became resistance through here and here and here. Had one little bar where the market went above that, and then the next bar back to the downside all the way to our low. So we'll ignore this little break to the upside and say that this area right here between the 48 and 58 level is our next key target on the top side that we need to get above if we're going to stay above. If we can't get above that level, look for a rotation back to the downside, and we'll start to take out the 88 level, the 200, the 100. For those traders who want to sell a rally in the Aussie versus US dollar, this is the area to sell against tonight or in new trading here today. Probably don't want to see the price move above the 78.80 level. That's a 38.2% retracement of this move to the downside. Stay below that level. That's more bearish for the Aussie versus US dollar. I'd kind of be favorite. If I have my choice, I'd be looking to sell right here in trading overnight with a stop above that 78.80 level and see if we get a rotation back to the downside. Remember, Stevens and the other RBA officials do want that currency to move to the downside. Some have suggested 75 level. Some other banks are looking down toward the 73 level. That should put a ceiling on how far this currency pair can go to the upside without having some intervention or perhaps even another interest rate cut by the Reserve Bank of Australia come March. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.